as an added bonus is the stock market. XPX. We do like to use this as a gauge to what status or which cycle we may be in the market, whether we're going to be in risk on or risk off. What I'm adding here is a put to call ratio in the options market. So we see whether people are going to be buying puts or buying calls in the options market, and generally give us a good gauge if the market's too optimistic or too fearful. So we can see here when we get down to the low, we get more calls, everybody more outright bullish. We generally get turns in the market. When we get more puts, people trying to sell the market, they usually hedge at the wrong. Retail investors generally do the opposite of what we need to be doing. So they'll buy protection on the way down in the options market, and then the market bounces. They'll, buy on the way down, or buy top. So most American investors are geared to buy the highs, sell the lows for some reason, and the market time after time reverses on them. So we can see at the tops, heavily buying calls, playing the trend, market reverses. And then the same on the ladder. So we had a signal here of some extreme buying of this rally, market reverse. So looking to continue to come to the downside. Another tool we do use is the fear and greed meter. I won't bore you guys or save it from there, but I will be posting some things in the chat. We're looking for this at least come down to 43.59, which would speed up some of the commodity currencies we're selling and some of the risk on currencies that we're taking advantage of. So